Hi everyone, I hope you're all doing well, and today I'm going to be talking about four UK stocks that I did buy this week, and I'll go through a few reasons why I added into them positions. 3 of them were added into positions and 1 of them was a new position. I don't think I'll be buying any more of that stock. It's just that it kind of got to the prices or cheap prices. I was like, yeah, I might add that to a little small position into my portfolio. It's one of my smallest positions in kind of lines with Aviva and Legal in general, but I thought it was a nice little small play to have in my portfolio. So I'll go through the 4 stocks, and obviously Greggs is going to be mentioned on this video. I had a few of you guys message me about Greggs, so I will be talking about that one because I've had a few questions about it over the last few days. But there's going to be 2 points that I'm going to just put in at the start of the video before I get onto these 4 stocks. So first of all, I had a lot of questions about Greggs, and I kind of didn't really update you on like the Greggs and the earnings for 2 days, just because I had all the videos recorded, planned out, edited it, and it doesn't make sense for me to kind of scrap all that work that I've put in and jump to the Greggs video, so it had to hold off for 2 days before I talk about Greggs. But if you guys are like asking me for like information on Greggs, I will try and get to the comments, but sometimes I just can't because I'm so busy. But I am on the Discord group, and there's also a lot of investors on the Discord group, and there's also the Patreons group. So if you want to know what I'm doing up to date and talking about stocks that I'm invested in, obviously I was talking about Greggs on the Discord group only a few days ago when the earnings came out. So if you do want up to date information, guys, I can't really give that on the comment section on YouTube. If you want regular updates, there are links in the description below where my Patreon group is. I'm always posting what stocks I'm buying, stocks that are making moves, and then there's the Discord group where there's a lot of good investors in there, and when also on there I'm posting quite often like opinions on stocks, where I'm buying stocks at. So if you want more up-to-date information, guys, I can't always give that in the comment section in YouTube. You know, join the Discord group, Patrons group in the description below. It's pretty cheap, it's worth the money. So if you want more up-to-date information, guys, then join through there. Now the second point I'm going to say as well is about stocks going down. Now I know I have a lot of new investors in the channel that watch my videos, and I know that sometimes a couple of red days scares people. Being down on positions 10%, 20% scares a lot of people, and I'm going to try help you guys understand my process in that position. And I think a few people get like a little bit like confused when I say like I don't mind stocks going down. In fact, I prefer when stocks go down. Also because it creates buying opportunities in some great companies that we don't normally get. As well as it going down, it also brings your cost basis down in a company you really like. Now I'm going to explain that a little bit further because I think a few people got a little bit, well, I don't really understand the reasoning behind that theory and cost averaging in general. So I'm just going to run that before I get onto the 4 stocks because a few people were saying like, oh, like when Greggs was going down, like, what's going on, panic stations, what do we do with our stocks? So Greggs obviously is dipping down. Now overall in general, before we get stuck into Greggs, like, what do we think of Greggs? I think Greggs is a great company that will do really well in the future. 2 to 5 years hold, it'll go fantastic. And obviously short term, there's the chance that it goes down. Short term, there's a 50-50 shot if it goes down or if it goes up. But if it does go down, that's a great thing as a long-term investor, because what you're going to do is you're going to get the stock for a lot cheaper prices. So let's just say, for example, we believe that Greggs is going to get to £30 and £30 is where we would sell. So if £30 our target and £15 is where the price of the stock is currently at, if we were to buy it at £15 and sell out at £30, we currently make about 100% in the stock, which is kind of my target. Like whenever I invest in stock, I'm looking to make about 100% gain in it. So if I said the stock was £15 and we're talking about here, a good stock to hold in the long term, if it's at £15 and we sell out at £30, we make 100% profit on the stock, which is great. Now in the short term, if the stock does move down, and let's say it does go down a fair bit, let's say the stock goes down, talking 30%, and let's say the stock actually goes down to £10 right now. Obviously in the short term we're down a bit, but a few people see that in fear, but it's actually positive because now if we can get, I'm being a bit dramatic on my prices, but let's just say, for example, our average in price was £15 and we were able to get that average in price down to £10. But still in the long term, it's a great company that will go up to £30, and that stock now goes up to £30. What you're going to have there is you're actually going to have your stock go up 200%. So originally when you thought this is a great company 2 to 5 years and you're buying at £15, you're going to make 100%. But the great thing is if it does go down in the short term and you can get that average in lower, and that's why I like stocks going down, because your averages gets lower. In the long term, you're still going to make the same amount of money. In fact, you're going to make more money. If you get your average down to £10, you make 200%. So stocks going down in the short term is a great thing because you get that average so much lower. It gives you a lot more profit. And that's what I like doing. I like getting that average lower and lower, because if your target's at 30, your target's still 30, whatever price it's at, your growth, your returns get a lot better. So in the short term, that's why I don't mind stocks going down. You know, in the first kind of 6 to 12 months of buying into a company, I'm not really bothered what that company does, because in 2 to 5 years, I'm aiming to make 100% on that company. So I don't mind about short-term movements, because like I say, it gives you that chance to average down. You get your average cheaper. It gives you a bigger percentage return. So I went from making 100% on this company that now it's gone down. I could potentially make 200% on this company. So when stocks drop in the short term, you know, 10, 20, 30%, it doesn't really matter. As long as the fundamentals are the same as when you invested and that belief the stock will go up, you're going to make more profit, which is a great thing. So I just thought I'd talk about that and that fear of being down on positions. So obviously number one is Greggs. So I did buy more shares in this one after earnings. Obviously the stock did drop down, and originally like the earnings was actually took quite positive, and then it just gently carried on selling off, and yeah, it is down quite a bit. You know, we had a high on about 20th of February, and since then the stock's down 45%, which is huge. And I now think that this is a fantastic opportunity in this company. Trading at a P of 15 for such a great company. Eventually, obviously, the dividend was cancelled, and I mean, I think everyone knew the dividend was going to get cancelled. You know, every company that's affected by the COVID are saving cash every way possible. So, yeah, I mean, they had to cancel the dividend, which I'm totally fine about. But, you know, eventually, when everything gets running, you know, the dividend will come back into Greggs. P of 15, and yeah, a 45% discount on this company is absolutely insane. Now, just to run through some of the basics of the company, you guys that watch my videos often, obviously you know my bull case on Greggs, and obviously the growth, fantastic growth. You've got the revenue and earnings growing year over year, and will carry on growing, which is absolutely fantastic. The balance sheet, it was in a strong position balance sheet to handle this, with so much cash, little debt. So it's in a really healthy business point of view as well. Management, they've got a fantastic management. Roger Whiteside there, I listened to him on the earnings call, and I was like, this guy is fantastic. Like, this is how you run a company. And yeah, they're also insiders buying. Also, it's doing delivery. It's working on its own supply chain. And in the long term, this is really going to help its profits. Now, I've just quickly run through my bull case on the stock, because I know a lot of you guys, you know it. But if you don't know why I like Greggs so much, I've got an actual video dedicated to the whole bull theory on Greggs. So go check that out if you want more information. But yeah, overall in the earnings report, I was really happy with it. I was really happy with it. The start of the year was really good for Greggs. A strong 2020, and we'll talk about that in the numbers a little bit later on. It did have to raise a little bit of cash, but it makes sense to make sure a lot of cash. When I was listening to the earnings report, I think it was Richard that was saying it. He said that basically they got a lot of cash in case they were in a position where they had to shut down for the whole year, which kind of makes sense. And now that it knows roughly what it's doing, it's going to actually start paying a little bit of that cash back. And you know, one of its focus before it does get into the dividend again is to make sure that it gets that balance sheet back to where it was, which I think is a great decision. I think that the dividend can wait. You know, make sure you got that strong balance sheet again, and then we go from there. But I don't think the dividend will be too far off from coming back again. And yeah, it came in, it talks about how on the 23rd of March it had to shut all of its stores. It also cancelled its dividend, furloughed most of its team. By the way, everyone, all the workers pretty much got 100%. The directors took a salary reduction as well, also freezing pay increases, which is great to see management being, you know, that committed to Greggs. And then it went on to say about how it trialled its stores in May, opened a lot of stores in June, and pretty much from July it pretty much opened up all of its stores. It also went on about saying how much it invested in like floor markings, also how it like sped up some store closures that were going to happen to save money. And then it goes on to talk about like the demand and how it's going. So obviously the earnings were going to get hurt because of store closures, but it goes on to compare like how store sales were going. And on the week of 11th of July, you can see it got to 68. 18th of July got above the 70% mark, and then 25th of July it actually got to 72%. So it's growing at nearly a 2% gain to where it was in 2019, nearly every week, which is fantastic. So on this sort of pace, it should get to about 80% by the end of summer, which will be absolutely fantastic if it can, because it goes on into the earnings report saying that basically if Greggs can get to 80% of the capacity it was running in 2019, it would be at a break-even point there. So by the end of summer, potentially, we could see Greggs actually get to 80%, and then it'll be at a break-even point, which will be really great for the company if it can get to that point. Now, it does go on to say that the work-at-home trend actually won't really affect Greggs because of the mass amount of people that do use Greggs are students and retired, so they kind of don't have that, not relying on that work at home. The great thing as well is when you think about what's going on in the world right now is that with students pretty much coming back in September, back to normal, that means that a lot of their customer base will be coming back in September. So when you think about it, might get to that 80% break even in the end of August, September time. Obviously that's when the students come back as well. So I see Greggs pretty much being at break even by the second week in September, and then maybe get back to profitability from there. So the earnings from the second half of the year should actually be pretty strong, I hope. From that kind of view, I was really happy to see that the customer base and where the kind of traffic was in the stores was actually pretty decent and very optimistic. So I was really happy from the traffic, where it was close to profitability. It was kind of everywhere where I thought it would be at, so that was really positive. And then it goes on about that it's still trying to do a lot of its infrastructure with its new frozen logistics. So that will obviously really help earnings from 2021. Overall, really happy with everything that came out of Greggs. Also, one quick thing on the sales side of it, it did say that obviously it was only open kind of like 3 months. So obviously the sales came in at 300 million, 2019, 546 million. So if you kind of work out that if you doubled that without the closure, then actually sales would have been beaten really well, and sales would have come in probably about 10% above 2019 levels. So 2020 did start off really strong, which is absolutely fantastic to hear. Next up was Dark Group. Obviously I'm not going to go fully into this company once again. I've got another full video on Dark Group on the channel, but this one dipped due to the travel ban between Spain, and then Dark Group retaliated and said, well, we're cancelling all our holidays. I just averaged into this one again. I think it's a good opportunity to buy into this airline, and like I say, when everything's kind of resolved, I see this company doing fantastic. It's just a write-off year for Dark Group, but in 2 to 5 years, this company will be in a really strong place, in my opinion. Still a big massive fan of Dark Group. When you're buying a lot of companies in these sort of industries, you want to be buying companies that have a good balance sheet, and obviously Dark Group has a lot of cash on the balance sheet, so that's absolutely fantastic. And I think when you look at the previous growth as well in Dark Group, you can see that this company has done pretty well previously. So even though 2020 will be a write-off year, I think it might come back strong in 2021. And then my third stock was a new stock. So this was Easyjet. Obviously the stock is sold off a lot because of the COVID-19. But same again, I bought this one on Monday just because of the drop because of the travel ban from Spain. We're talking about a stock that's, a third of the price it used to be, down 64%. So obviously it's on a big discount. It had done well previously to that. It's just a nice, easy, cheap stock to buy in my opinion. Balance sheet wise, it's not too bad. It does hold a lot of cash, so I think it'll be okay. And it's also doing a few flights to other places as well, which is great. Previously, earnings have kind of increased slightly over the couple of years, but revenue has increased as well. And the big thing about this one, I think, when you look at it, as well as having a decent cash position, it did like to pay a little bit of a dividend as well. So this is kind of a 2 to 5 year hold for me, and I think it'll do quite well. I won't probably add into it any more than what I have done now, just a small position to diverse my kind of airline stocks. And the last one is Cineworld. So obviously this one's dropped quite a bit, and yeah, like I say, I think I've got a video on it somewhere, but like I say, if you're a new investor, I would not invest in this one just because of the risk you're taking on. I like I say, I probably won't rate this as a buy. I'm just kind of doing this as a bit of a spec play. It doesn't make up a massive percent in my portfolio. I'm just kind of like having a punt on this one because the thing with Cineworld is when you look at the stock, you know, it's down absolutely huge. You know, it was trading at, you know, what, £2 December 2019, and now it's fallen off a cliff. Even at the start of 2019, it was nearly £3 stock. So there's a risk that this company goes bankrupt. So if you're a new investor, don't invest in this one. I'm just kind of investing in this company from the point of view that if it doesn't go bankrupt, this is a stock that's easily going to make 3 times your money, 300% return, maybe even 400% return at these sort of prices. So that's my kind of theory with this one, is this company either goes bankrupt and you lose it all, or this company makes it through in 2 to 5 years, you make 3 times, 4 times your money. The reason why people talk about this is obviously because the delay in films is obviously affecting Cineworld, but obviously towards the back of the end of the year, then that might start to level itself out. But the big threat that Cineworld does have is obviously its balance sheet, and that's what's caused a lot of problems. You know, when it has raised a bit of money, but previously going into that, it had 140 million, which is where the problem is. And like I say, this is why you need to buy companies with strong balance sheets with a lot of cash. So if something like this happens, they can make the way through it, and that's why it's so cheap. It's the fear of bankruptcy because it had such a bad balance sheet. And like I say, the thing with this one, guys, is like I say, I won't recommend it as a buy. I'm an experienced investor, so I can handle this like situation and average in and know what I'm kind of doing and understand the risks that I'm taking. But as a new investor, this is one that might just scare you a little bit too much with some of the percentages that you could potentially go down in this one in the short term, and also that sort of risk. It's a lot of risk, and it's one of those stocks that if you do invest in and you get it wrong, it could put you off investing. So I like I said, I still don't recommend it as a buy, but I am playing this one a little bit and see what happens overall. So guys, those are the 4 UK stocks that I bought this week. I hope you found the information at the start useful, and also the update on Greg's and the other companies as well. As always guys, smash that like button, subscribe if you haven't, and I'll see you in the next one.